Welcome back. If you're just joining us, you're watching Facing the Mortgage Crisis. Our panel includes attorney Dan Claggett of Legal Services of Eastern Missouri, Eric Madkins of the Urban League, Linda Ingram of Beyond Housing, and Malik Ahmed of Better Family Life. And now we're going to start with our first audience question.
Hi, my name's Elliot. I'm from Afton. My question is, if you have an adjustable rate mortgage and your rate goes up and you've been making your payments just fine, but with the new rate increase you can no longer make your payments, is it possible to call your lender and try and work something out with them where maybe your rate goes up a little less than they wanted it to go up, but you're still making the payments?
Linda, you want to? That's brilliant.
Yes, I would definitely call the lender, or you can call one of us and come in to see us and we will call with you, because there's no reason to allow, in this day and age, times have changed, to allow an adjustable rate mortgage to go beyond your ability to pay. So definitely they're all willing to negotiate, and it's certainly worth a try. Just ask. You need to ask.
Okay. Next question, Claudia.
Hi, I'm Claudia from St. Charles, and as a community member and a homeowner, I'm concerned about how the ripple effect of the foreclosure issue affects all of us. And I just wondered, for example, I'm an educator, and I wondered what your thoughts were on how this affects, for example, school funding and already strapped school districts in St. Louis, and what the ripple down effect is for all of us.
Well, I'm glad you asked that question, because I think that that is really the crux of this crisis. One, the home mortgage crisis is perhaps the greatest crisis that this country has had since 1929, the Great Depression. So it's a very serious crisis. The ripple effect, certainly on school districts, if most school districts are funded by local taxes, real estate plays a very important part in those taxes. So if there is an increase in home ownership foreclosure, the tax base gets crippled. In a place like St. Louis City, that is such a real serious problem. In addition to that, the foreclosure on a block could create decreased property value. It can increase crime. It can increase vandalism. It can even increase the perception of a community being undesirable, or a city being undesirable as a place to live and raise a family. And as we know, cities and regions are competing globally for resources, for industry. And if a city is tainted with a huge foreclosure crisis, that could doom the city forever. So this is a crisis that impacts everybody, all racial groups, all economic groups, all social groups. We are all in this together, and together we've got to figure out a way to come out of it.
And you know, speaking of the effect on the school system, speaking of children, the Pew Charitable Trust today just came out with a report on the impact of foreclosures on children, and what they found that children between the ages of 4 and 7, if they move at least 3 times during that period of their lives, they are 13% more likely not to graduate from high school. So this obviously has a big effect on them, and even younger children as well.
Oh, absolutely. Yeah.
And our next question is from Maureen.
Hi, I'm Maureen, and I'm from Kirkwood, and I recently lost my house to foreclosure, and my house is still sitting empty, and I am wondering if there's any help available to try and get my house back.
You would know that, Dan. I would
Well, how long ago was the foreclosure sale?
2.5 months ago.
Is the lender still have the property?
I think so.
Sometimes if the lender made certain representations to you and lulled you into believing that the foreclosure sale wouldn't take place, sometimes you can set aside a sale if there were certain misrepresentations made in connection with the payments or the sale itself. That can be a basis for setting it aside. So the options are limited. It becomes much more difficult to set aside a sale after it's occurred, but it's not entirely impossible. There are remedies under certain circumstances.
We've got a question here. We have an email question from Ann. She says, my husband and I are looking into using our home equity. Is this a bad time to be thinking of taking out an equity line of credit? What do you think?
Yes. Yes, yes.
Yes, yes, and yes.
Yes, yes, and yes. We are beyond the point of using our homes as bank accounts. Just should not be doing that. I mean, there are various circumstances where you might want to get a small loan to do repairs, but taking out money because we don't know where the bottom is yet on values, and so when you take a home equity loan, you don't want to get what we call upside down in the mortgage, where you owe more than your home is worth.
And I've heard a few sad anecdotal stories about that very thing.
Right.
Yeah.
Right.
Our next question is from Mark.
Mark Campen, I'm a realtor on the Illinois side of the river. And just on the subject you were speaking of, my question is, how many times do you see a borrower getting in trouble, not with that original loan, and maybe a good realtor has hooked them up with a good lender, and that loan is fine, and they would have been fine if they would have just paid on that. These people are listening to the TV ads, essentially use your home as a checkbook.
Right.
How many people are getting in trouble with this? We're seeing this to some extent in our locale, and I think we have fewer problems than some of the other neighborhoods, but this is kind of a hot button for me. This easy credit and the come-ons that you see on television.
Right. And you can save money on your taxes. If, you can deduct it from your taxes.
If you can make your mortgage payment, yes,
right,
yes,
right.
yes.
Yeah.
Yeah.
I want to jump in. I think that we talked about scams a minute ago, and the sad thing to say is that it's been a scam nationwide and industry-wide. The home equity, for the most part, has been a scam. Large companies have preyed on vulnerable populations, and to, as Linda said, making your home a checkbook was never intended for home ownership, but the advertisement industry and large banks saw money there, money to be made.
And answer to that, or part answer to that, there are reasons to do what you're saying, but I'm talking about the unscrupulous lender that jumps in. They'll look at the county records of purchases from the last year or two,
Sure.
and they're on the telephone.
Sure.
I can, do you need $40,000?
Right.
We can get it for you.
Yeah.
And
A lot of
frequently
high-pressure tactics there.
Yeah, and how much of that are you seeing with people that did just that?
see it all the time. I mean, most of the cases we see involve refinances, and if it's a loan that was refinanced within 3 years, there's a federal statute that sometimes allows the borrower to cancel the loan, called the Truth in Lending Act, depending upon the circumstances. Another effective statute is a Missouri statute that prohibits deceptive practices. So if the borrower was talked into a loan that makes no economic sense, sometimes that's a remedy as well.
And we're seeing that a lot too. Oftentimes we see borrowers that are actually preyed upon. I mean, it's just a lot of times they're in a vulnerable state to where, like, if they're in a crisis situations, they'll usually just latch on to the first product that they'll usually see. So I mean, we're seeing that, I mean, a lot of times, and I think a lot of this speaks to the fact that there are a lot of products that are out there, but the biggest situation is a fit for that particular product. A lot of the people that are preyed upon, that particular product does not fit that particular borrower or whatnot, and that's where you see a lot of the unscrupulous dealings that are taking place nowadays.
And Ruth, I like to give the example. For instance, if you put that beautiful blue jacket on your credit card, and then you decide to take your credit cards and put them against your house, they can take your house. But if you don't pay your credit card, they can't take that jacket away from you. But if you put that jacket on your house, they can take your house if you don't make that payment. So that's why it's important to keep your home debt, your home debt. And don't put your car, don't put your credit cards, don't add anything to that home debt.
Exactly. Got a question, another email question. It says here, my real estate taxes are 3 years delinquent and I will lose my home this August if I can't pay at least 1 year of them. This is interesting because they're not talking about mortgage payment, they're talking about their real estate taxes. So how did she get in this situation in the first place? Because I thought if you make a mortgage payment, then aren't the real estate taxes, isn't there money put in escrow so your taxes are paid?
That's what's happened a lot of times. A lot of the loans that were at, when they're refiled, at least at the origination stage, those there's no escrow account that's oftentimes set up. So oftentimes, if a person is making a mortgage payment, if they're not setting aside those dollars, or actually saving money to go toward those taxes can fall delinquent. And oftentimes we see borrowers that come to our office that are in a situation where they have negative escrows, and those negative escrows are the result of the mortgage company actually paying those taxes for the borrower, and then actually escalates and makes the mortgage payment actually become beyond affordability in some situations. So we see that a lot of times. A lot of times that's a situation where a broker may say, okay, your payment's going to be $500, but they're only looking at principal and interest. They're not factoring in the escrow, the taxes and the insurance. So you have a situation where you have you're making mortgage payments, but you have a property that's not insured. You also have a situation where taxes are not being paid. So that's a very dangerous situation.
So right off the bat, they need to know in terms of the agreement of the loan, the terms that they have an escrow account and that the taxes are being paid for them, or they have to pay them themselves.
Exactly, or they'll pay later. And then when they pay later, it will not be good.
And just a real quick addition to that, you also have to have homeowners insurance. And if you let that lapse yourself, then the lender will put a forced place policy on there that you have to pay for. That policy, and many homeowners don't know that that policy only covers the lender, does not cover the homeowner. It costs
almost double what
and
you
it costs
pay.
double, right?
It doesn't cover theft. It doesn't cover. There's no replacement cost coverage. I mean, the coverage is actually bare basic. It has no coverage, no coverage, no comprehensive coverage for the borrower.
Wow, scary stuff. Our next question is from Meredith, I believe.
Hi, I'm Meredith, and I'm a new resident to St. Louis City. And I'm curious about how this mortgage crisis is different in the rural, urban, and suburban areas of the region.
Is there a difference?
Well, yes, there certainly is a difference. In the urban area, you have a lot of medium income and low income people. And low income and medium income people are more vulnerable to subprime loans. I think there's statistics that suggest that if you make less than $60,000 a year, you're probably at the highest end of the foreclosure crisis. And then we also know that there's been some mortgage brokers as well as some out-of-town banks that have particularly targeted the urban areas where they assume that there's a lot more ignorance on the mortgage process. And, unfortunately, a lot of people in urban areas who are first-time home buyers or who were refinancing find themselves in a very serious crisis. But the problem is still broad-based. It covers all areas, but in particular, urban areas are getting hit very hard.
All right. We have an email here. This person that emailed, Cassie, says, when I signed up for my mortgage, I received a fixed rate. But at the time, apparently her credit was just so-so. She's trying now to get rid of her principal mortgage insurance, but doesn't know if she can refinance so she doesn't have to pay that. But if you're a high-risk person, don't you have to have mortgage insurance to begin with?
Right, if you don't put 20% down,
yeah,
then you're required to have that.
And then once you reach the 20% threshold of equity, the lender is supposed to automatically take that off a lot of times, again, if you're dealing with unscrupulous lenders, they'll keep that on, knowing that you have already passed that threshold.
Okay. Our next question from the audience is from Terry.
Hi, I'm Terry Hunt from Intercommunity Housing Association, and I was wondering what are the ways that agencies and churches that might not have a lot of financial resources, what are the ways that we can get involved in supporting and responding to the crisis?
Well, I can say right off the bat, in St. Louis, we have the St. Louis Alliance for the Preservation of Home Ownership, and that's a coalition of 5 agencies: Better Family Life, Beyond Housing, Urban League, Catholic Charities, and ACORN. We would certainly appreciate any help that we can get from organizations such as yours. We are trying to mobilize as many people as we can. We're trying to educate. We are giving all kinds of seminars just to get the word out. And certainly any of the resources that we can get, that we can redistribute to the broader community, we will certainly appreciate that kind of help.
And I would echo that for legal services of Eastern Missouri as well. The more that the word is out there that legal assistance is available to low-income individuals, I think the better.
Yeah. Thank you.
This question, I'm so glad a senior citizen wrote in with this question, because this has been on my mind actually. This senior citizen, her name's Betty, she's thinking about a reverse mortgage. Is this a good idea for a senior citizen to do? Because heaven knows we've seen a lot of commercials about this. What do you think?
Again, it comes down to product and fit, basically, and that's where counseling, housing counseling, most definitely is important. And there's also stipulation that they have to receive mortgage counseling, housing counseling before entering into a reverse mortgage. So the best advice that I can give is to seek services from a housing counseling agency, a HUD-approved housing counseling agency, to receive that information before going into a reverse mortgage, because, again, it's a situation where you have product and fit, and you want to most definitely make sure that you have the right product with the right borrower.
I would imagine, too.
And Ruth, I should add that the senior citizen market is probably the market that's most vulnerable for scams. A lot of times senior citizens don't have family members who understand what their situation is, and you know, with seniors it's almost like they're easy prey in terms of somebody offering them something to relieve them of, say, high energy bills, or fixing their house, or repairing the roof, or some other kinds of things. So they are a target for these scam artists. And you know, as Eric said, we just need to get to that population group, because it is they're just getting hit with all kinds of scams.
Oh yeah, and not just housing scams,
Yes.
all kinds of
Yes.
things. That is so true. We are getting so many emails here. This is a great response. We have, this is a phone call. This is from Greg, and he wants to know if there are any options available for a person who is now employed at a new job. It's paying less. This is probably someone who got laid off from a job, is now at a job paying considerably less, and probably just wants to, you know, readjust the terms of their loan.
Right. He needs to call a housing counselor, and we can do the complete intake process, which, by the way, usually, and Eric can agree or disagree, about an hour and a half to 2 hours is what we spend with our clients, and call the lender. And certainly that is something important that lenders will look at and see if there is any room, because they want these mortgages to be affordable for homeowners in general.
And also working with a housing counselor, you can also see your expenses actually detailed and on paper. So what we'll do is we'll sit down with you and we'll look at how much you may be spending toward utilities. We'll do a cost analysis. We'll see what your debt-to-income ratio, housing ratios look like, and then from there we can actually communicate that information to the mortgage company. And then from there, if there's any situation where they can do a modification or any type of forbearance agreement, we'll advocate and try to negotiate those terms for you at our agencies.
And Ruth, Eric hit on it a little earlier, in terms of what the Urban League offers. And I think it goes with Beyond Housing and Better Family Life, is that we offer holistic services. Sometimes we find that it's not that the homeowner is irresponsible and didn't pay the mortgage, but they could have been laid off. They could have, the cost of living could have risen, and they are unable to pay because they just don't have it. So Better Family Life also help with providing jobs for people. Sometimes our recommendation may be that you need a second job. When we look at your debt to income ratio, you're just not making enough money. Maybe 2 years ago, 3 years ago, it was adequate, but inflation and all of the other costs, fuel costs, have gone up, and you just can't afford to pay right now. So it's also important that we look at clients with their job needs, transportation needs, child care needs, because all of these are factors that have to be taken into consideration.
Okay, we have one more audience question from Jonathan.
My name is Jonathan Roper. I'm from Ferguson, St. Louis, and my question is, how are local authorities and neighborhood committees responding to many new vacant homes and crime that comes along with vacant homes?
Good question.
Well, I know the city of St. Louis, the mayor has convened a task force to beef up the police protection in some of the areas that's vulnerable. And I know that Charlie Dooley in the county has convened some meetings to do the same kinds of things. Both cities on this side of the river are, or I should say the city of St. Louis and the county, are taking some proactive measures to bring together stakeholders, lenders, bankers, to address some of the auxiliary issues that go along with the foreclosure crisis. And I'm almost sure that in the near future we'll see more of that, because again, as we've been saying all along, this is a huge crisis, and it's going to take the mobilization of a lot of resources to bring some level of control over this.
I think even the federal government is discussing what to do with all these vacant homes, and what to do. We have a whole group of families who have lost their homes, and we have a whole group of vacant homes. Now, what can we, as the United States, do to take care of all these who are homeless and all these homes that don't have owners? So there's got to be an answer down the road.
Absolutely. One more quick question, and I'm assuming this is from Kim. It's a phone question. Where would the foreclosure notice appear? And I think she means where would it be published?
Yeah, it would be published in St. Louis or St. Louis County, the Daily Record, which is a legal publication, which is kind of sort of a fiction that people read, these daily newspapers, but that's all the law requires. And then, of course, you should get a notice by certified mail. It has to be by certified mail, the borrower, of the date and time of the foreclosure sale.
Okay, thank you, Dan. And thank you all for joining us. This has been a topic. We could talk about this for another hour easily.
We could.
The conversation continues online at KETC.org. Linda Ingram and her colleagues, Debbie Irwin and Natasha Gabney of Beyond Housing, along with Maurice Washington and Tyrone Turner of Better Family Life, will field additional questions on our website for the next hour. If you have tips, experiences, or neighborhood resources that might help others, please share your information on KETC.org. If you want additional information on housing counseling, call United Way at 211. Now, on Tuesday, July 22nd at 7 p.m., we're going to be live once again. We've got another live Facing the Mortgage Crisis special. That topic that's going to deal with neighborhood stabilization, which is exactly what we've been talking about, which is exactly what that last question was all about. Trying to keep neighborhoods stable, trying to get people back into those homes. That legislation that we were talking about in order to give people relief from housing, it's $14 billion. I believe 4 of that is supposed to be for purchasing homes that have been foreclosed upon, rehab them, and then get people back into them. So we're going to see what happens. Any final thoughts? And we got 30 seconds.
I have a final thought.
Okay.
A house and a home are two different things. We recently had a call from someone who was suicidal about losing their home. No home is worth that at all, ever, period. We can help with all sorts of transitions. So we have to put that in perspective.
And
okay, and I'm sorry, we are out of time. I'm so sorry.
I just
For
want to thank
KETC Channel 9, I'm Ruth Ezell. Good night. Thank you all for joining us tonight.